Most prominent investors of all time. There are some very well-known investors who have been able to generate success as well as wealth. Who are these investors and what have they achieved? Welcome to the TheBizPage channel. In this video, we will be looking at a list of prominent investors who have been able to achieve success over the years. If you haven't already, then be sure to leave a like on this video and subscribe to the channel for more valuable content. Now without further ado, let's dive in. Main body. The first investor to be looked at is Michael Steinhardt. This investor is one that not many people will know of, in terms of being associated outside of Wall Street. Steinhardt was able to build and achieve a track record that was able to stand out for its recognition on Wall Street. The achievement that Steinhardt obtained was maintaining 24% compound average annual returns on investments. He was able to more than double the S&P 500 within a 28-year time frame, which was considered to be a great achievement. It was said that Steinhardt invested in a wide range of assets, including stocks, bonds, long and short options and a variety of currencies. Long-term investing was his main focus, however, he also invested short-term in the position of a strategic trader. The second investor to be looked at is George Soros. George Soros is a billionaire investor originally from Hungary and is based in the USA. In September of the year 1992, he took $10 billion as a risk on a single trade, and as a result, he shorted the British pound. His risk was able to pay off and made over $1 billion within a day. The total net profit for trade came close to $2 billion. The quantum fund owned by Soros was a well-known asset, and it has made an average annual return of over 30%. This has been achieved while Soros held the position of lead manager. The third investor to be looked at is Peter Lynch. Peter Lynch is known for being the manager of the Fidelity Magellan Fund. He held this position over 13 years. While being the manager, his assets were able to rise from $20 million to over $14 billion, which is a large significant difference that amazed many people. In 11 out of the 13 years of being the manager, Lynch was able to generate an average annual return of 29%. This achievement enabled him to beat the S&P 500 index. Lynch had some good advice for investors and people looking for success. Examples are to be humble, flexible and to learn from mistakes. The fourth investor to be looked at is Carl Icahn. In the investing world, Carl Icahn is considered to be a leader in shareholder activism and sometimes known to be ruthless in his word. It depends on one's opinion on how he sees business. Icahn is known as a value investor. This type of investor reaches out and looks for different companies that are believed to have poor management or other issues. Icahn would attempt to get into the board of directors by obtaining a number of shares to be voted in. After doing this, he would make appropriate changes to the senior management to something that is more efficient and effective. The fifth investor to look at is John Templeton. John Templeton established the modern mutual fund. Building his own experience helped him to build the idea. Templeton was able to buy up to 100 shares of the NYSE companies for under $1 in the year of 1939. A total of 104 companies were acquired from a total investment of $10,400. 4 years after acquiring the companies, around 34 became bankrupt. However, Templeton was able to sell the entire remaining portfolio for a price of $40,000. This gave him more insights into the investing market and how some companies rise and fall. Interval. Before we move on, are you finding this video interesting? If you are, then be sure to leave a like on this video and visit the TheBizPage channel for more valuable content. For more information, then read the video description below. Main body. The sixth investor to be looked at is Bill Gross. Bill Gross is also known as the King of Bonds. He established PIMCO and holds the position of leading manager. An amassed $600 billion has been made in fixed income investments by Gross and his team. Buying individual bonds has been Gross' main focus in building wealth, however, he also has a strategy for investing that covers the total portfolio. He states that any successful investment in the long run has two key factors. The first factor is to have the ability to create a long-term attitude and having the right structure arrangement within a portfolio over time. The seventh investor to be looked at is Benjamin Graham. Benjamin Graham was originally Warren Buffett's mentor. Graham took the role of being a mentor because of his work being known as father of value investing. He was successful and he, along with his clients, were able to make good profits without the need of taking large investment risks in the stock market. He was able to do this because only financial analysis to do stock investing were used, which was the main key to the success. Graham also had parts in the formation of the Securities Act of 1933. This act meant that any public companies needed to unveil independently audited financial declarations and reports. The eighth investor to be looked at is Philip Fisher. Philip Fisher has the nickname of being the father of investing in growth stocks. His own investment firm was established in the year of 1931 and was known as the Fisher & Company. Fisher was the manager until 1999, where he retired at the age of 91. In the space of his 70-year-long career, Fisher obtained great returns for himself and for a number of his clients. Fisher was a long-term investor. In the year of 1955, he purchased the Motorola stock in 1955. He held this investment until the year of 2004 when he passed away. The ninth investor to be looked at is Warren Buffett. Warren Buffett, one of the most well-known investors in the investing and business market. He is also known as the most successful investor in the world in terms of starting capital and how he was able to grow it. Before getting into partnerships, Buffett worked in a number of investment jobs. His previous investing job had earned him up to $12,000 per year, which was very good money during the time he worked. When his partnerships were, he was able to generate around $174,000 in personal savings which he used to invest with. That $174,000 investment has turned into a portfolio worth $50 billion. The 10th investor to be looked at is Jack Bogle. Jack Bogle is an investor and established the Vanguard Group, which is linked to low-cost mutual fund investments. However, this is not the method of how he started in business. Bogle obtained his education and graduated from Princeton University. Following this, he went to work at Wellington Management Company, and was able to obtain the position of chairman as he worked his way up. Bogle still had to deal with being dismissed for a bad merger. However, he learned a huge lesson and moved on to establish his new company. The Vanguard Group was successfully grown to being the second largest mutual fund company. Ending. I hope you enjoyed learning about these investors, which ones stood out the most and why. Feel free to leave a comment below in your opinions. If you did find this video informative, then be sure to leave a like on this video and subscribe to the BizPage channel for more valuable content on the way. Thank you for watching.